Welcome to Java. Thank you kindly for joining me. It's December 1st, 2024, and it is Sunday. So we are in the midst of the Black Friday deal weekend, so to speak. Tomorrow is Cyber Monday for any of you that like to typically shop online are supposed to be the deals for tomorrow. But we will be looking at the markets. So a lot of things going on this past week. I hope everyone has enjoyed their weekend and the Thanksgiving holiday and had an opportunity, hopefully, to spend time with loved ones and family, as that is the most important thing of all. So, with this, let's go right into what is going on at the moment. We've got the MMRI. Now, markets were open Friday for a few hours. They closed at 1 o'clock in the afternoon. So, very early, really not any institutional investors. So it was very light volume, volatile trading as we expected. So with this, there was a lot of buy-in since it was the retailers. And with this, we've had the 10-year yield is dropping quite a bit and the relative strength of the dollar dropping as well. We were speaking about that after last week's epic rise in both, the dollar hitting above 107. So with this, we've got the 10-year is starting to come down. Looks like it's going to pull back a bit more as well. As it does, that gives more room into the equities and stocks to rise as it eases up on pressure. Now, the risk indicator 274.5 has dropped. This is going down, and this is because of these two dropping. And I'll speak a little bit about the currency wars that are going on in a bit. With the fear greed meter, it's relatively the same. Still high grade driving this market. A lot of retailers still in here, using it as a roulette table, so to speak, gambling. But we've got a lot of coming in with the CHIPS factors and also the United States government still giving out quite a few subsidies in one form or another, whether it's through the remainder of the CHIPS Act or whether it is through the defense sector with more loans to Ukraine. So the sentiment right now is it is kind of a back to work attitude for Monday, right after the holiday. As I said, we've got tariff wars going on and some geopolitical tensions that can affect this market, in particular, certain sectors. And with the Middle East, it's going to affect oil. Now, oil has been pressured down of late, and we'll keep an eye on that, of course. Now, we've got King Dollar. It was back in power for a while with a relative strength higher. Now, as it's dropped, we've got a couple of other things emerging that might shift that again. Now, what we're looking forward to this week is we've got the November jobs reports coming out, and we're looking forward to the jobs report on Friday. And Jerome Powell is speaking himself. So we've got the Federal Reserve monetary policy meeting, the notes coming out, so that will have an effect as well. We've got cryptocurrencies right now above 97,000 for Bitcoin. We've got XRP is the story. We'll talk about why in a little bit, but it has jumped a tremendous amount, heading towards the $2 mark. So if you have this right now with XRP, Ripple is what it's called, has been locked up in lawsuits with the SEC for some time. And there is recent movement on that. So we'll speak about that as well. Ethereum also looking a bit stronger. So with all of these, we had MicroStrategy. They mainly buy Bitcoin, Michael Saylor's company. And what they are looking at is being included in the NASDAQ 100. So if they do this, this could spark the story saying $2 billion in fund inflows, because that would open it up to institutional investors, basically making them similar to an ETF. However, since they hold the asset, they sell more stock to purchase more of the asset, which is Bitcoin. So in essence, they are raising the price of their own stock and have kind of a positive funnel going on there. Now, speaking about the currency wars, I'd like to go over to China for a bit. there is an analyst that was looking at this. Finally, we've got more people paying attention to this, saying China could devalue their yuan to spite Trump. This is over the tariff hikes that he has promised, not just China, but he has also since been speaking about tariffs on Mexico as well as Canada. Now, these are to pressure the companies in both the United States and abroad to uh, reinvest in the United States and bring them the manufacturing and the jobs back is the goal of this. However, it is opening major currency wars and trade wars. And so we're seeing the first of this as China is looking to protect themselves and devaluate their currency in that race. So let's dive a little deeper into the calendar that we're looking at coming forward of events. So manufacturing on Monday, we're getting job openings Tuesday, but we're getting ADP employment, and then also more on the US employment report and unemployment rate on Friday, with initial jobless claims Thursday. So big jobs this week is really what they're looking forward to. A couple of Fed presidents speaking, and then Jerome Powell come out and speak as well. Now, I'd like to bring up a couple of other things that are going on with the US dollar. Now, Trump is demanding commitment from BRICS, essentially confirming that they will continue to use the United States dollar. Now, they kind of have to at this point in time. They cannot de-dollarize completely because they still have a tremendous amount of dollar-denominated debt, meaning they must still have dollars in order to pay that debt. And in order to have the dollars means they must still be doing trade and stay in this cyclical game. Now, this does not mean that they are not diminishing this and spiraling down to move out of it. It just means that it cannot happen all of a sudden. So even though he is saying this, they are still committed. Uh, the only other way out of this is if they defaulted on their debt, which would not be a good course. It would also cause extreme imbalances in their trades, and they would suffer negatively. So this is almost an impossible thing for them to go against. They will have to go along with the US dollar, at least for the time being. Now, a lot of these currency wars and the things that are going on are geared towards pushing everything towards central bank digital currencies and digital assets in general. Now, I had put this out last Wednesday prior to the market closing for the holiday, talking about the impact of digital assets on financial stability will be minimal. Well, of course, it's going to be minimal because it's just a conversion. What they're hiding on the back end is the Federal Reserve just came out and reported more of their income operating loss. For this last quarter, you can see that it is increasing in their loss again, heading the wrong direction. So the financial stability of the Fed is within themselves. So yes, they can, to a point, print themselves out of this. However, they're definitely heading the wrong direction. So we will take a little look into this. Now, the other thing the Fed is supposed to be looking at is inflation. Now, this is all tied in with the Western world. Why I say that is it is not an economy in a glass jar. They all work within each other, in particular the Western worlds. Now, we've got over half the euro area countries still have inflation above 2%, so very high in that mark. That will even out and bleed into the United States as well, as these work kind of like flows of the currency trade and the values work kind of like water. So if you've got a hole, then the rest will flow towards that to kind of fill it in. So you can see the euro areas, some that are in much deeper trouble than others. So with this positive sign, we've got shoppers spending 11.3 million. This is just what's in so far on online shopping. This was for Black Friday. And with this digitization, they're able to get these numbers pretty quickly. However, as I said before, I'm more interested in the makeup of what was purchased. Now, did people purchase things that are discretionary, meaning not necessarily goods that they need, or did a good portion of this go towards goods that they had already planned on spending on or need, and they just waited for the sales for Black Friday? Now, I want to take a short moment to talk about what we were speaking about in our Discord discussion, this K-shaped recovery. Now, there's a lot of talk amongst economists. When you have a V-shaped recovery, you have a dump and a rapid recovery. Now, K-shaped recovery is a major warning signal. It means that the economy has gone through some major issue that has caused it to tank. And then you've got some parts of the economy recovering faster than others and others declining. Now, our current economy, a good example of this is we've got NVIDIA and the artificial intelligence. These are recovering very well and very rapidly. However, the backbone for a real economy in the real world, which is why I always say there is a divergence, would be, for instance, manufacturing. So we've got a definite downturn in the manufacturing, and that is what is happening here. So the splitting of the two, but this is also between your consumers. Now, your consumers had a drop. They had a major setback with the C19. And now we are watching a very divergent recovery in consumer spending as well. We've got the upper class getting richer, and we've got the middle and lower class getting poorer. So the middle class being wiped out. And if they're not making it into that upper class, they're being shoved down and going into this K-shaped recovery, which is not a good thing. So got a little bit more about this into the cryptocurrency. I did have Robert Kiyosaki on the last one because he's talking about Bitcoin as it is with an asset class and to self-custody. Now, a little bit more about this. Ripple, which I was bringing up before, is heading towards the $2 mark. It's at 190 right now. Now, we've got almost a regulatory approval. As I said, it's been locked up in the court system with the SEC for the past few years, I believe since 2020. So with this, if they get out of this, we've also got the RLUSD coming out. They are making stablecoin out of it so they can use it in the meantime. And the New York Department of Financial Services is looking at this for an approval. So this could come out on December 4th. And that would mean that Ripple would, in essence, make it into this crypto market as well as a stable coin and could be adopted for much larger uses. So looking at this for a significant increase on actual usage. So that's a good thing for the underlying. Now, going into a little bit more of this boom that we've been seeing, these are some of the leaders. We've got a lot of fear moving into the cryptocurrency space. It is still a very low market cap for what I expect the growth will be coming forward. So with this, another question. Brazil Central Bank, they've got serious currency issues as well. And the Brazilian real, they've got it here as BRL, is collapsing against the dollar. Again, back to these currency wars. So they're trying to ban self-custody of stable coins. Now, the only way they can ban stable coins is because those must go through institution in order to have their pegged value. So for the most part, I'm kind of going over this lightly, but that are trying to curb this because it is killing their native currency there, so to speak. So this ban will probably only increase the usage, to be honest with you, is historically how that has worked. So just a couple other things to go over. We've got some labor issues. We are watching the jobs this week. Now, this is over in Germany, but the Volkswagen Union will start walkouts over the cost-cutting plans and closing the factories. But I think they're going to have to look out how they go about this because they could find out that it will work in reverse for them. Now we've got the United States job growth. They're looking towards snapback after they're saying that last jobs report was awful can't quite be as bad as that. They blamed it on the storms and the strikes. So we'll see what comes out. That's why it's the big story coming forward this week. So back to the cryptocurrency, they are looking forward to blockchain being the railroad for the future. But that is the blockchain in general. That's not coins, that's the usage. Okay, a couple of other things. We've got Ukraine and Israel basically eating up the weapons stockpiles. Now, this is the Indo-Pacific commander for the United States, is an admiral, saying that with the United States sending all of the weaponry over there, that there is not much left domestically to protect. So with this, we've also got United States in arms sales to Taiwan. That's irritating China a bit. And they have basically spoken about retaliation for that. And over the weekend, we also had this is not related to that directly. But in the back end, we've got Syria sending troops. There was a lot of issues going on with this. So again, this could affect oil. It should give it a bit of a boost as far as the markets, but we'll see how things go. Keep an eye on this, still more unrest. So with this, I wish you all a wonderful rest of your weekend, and I will see you in the morning. So until I see you again, my friends, stay free.